According to Bain & Company, nearly 40% of Chinese luxury spending in 2024 occurred outside mainland China. This figure highlights a shift in purchasing behavior, with Chinese consumers making luxury purchases in international destinations such as Paris, Tokyo, and Milan. McKinsey & Company reports that, before the COVID-19 pandemic, Chinese shoppers accounted for over one-third of global luxury spending. The Financial Times and Bain & Company note that despite economic fluctuations and the US-China trade war, Chinese consumers continued to purchase luxury goods both domestically and abroad. The Peterson Institute for International Economics states that the US-China trade war, which began in 2018, introduced tariffs on a range of goods, including some luxury items. These tariffs increased costs for both importers and consumers. Bain & Company data shows that after the introduction of tariffs, Chinese luxury shoppers increasingly made purchases overseas, where prices were often lower and product selections broader. Bain & Company and McKinsey & Company report that luxury retailers in major international cities have adjusted their strategies to accommodate continued demand from Chinese consumers. According to Bain & Company, the US-China tariff wars did not stop China's luxury market, but instead shifted consumer behavior. In 2024, China's domestic luxury market contracted by an estimated 18 to 20% based on industry reports. However, Chinese consumers increased their luxury spending abroad, especially in the Asia-Pacific region, as reported by the Financial Times and Bain. In 2023, Chinese shoppers accounted for about 22% of global luxury spending, with a significant portion occurring outside mainland China. Data from Morgan Stanley and Bain confirm that tariffs led to a shift in luxury purchases from domestic to overseas markets. As a result, luxury retailers in destinations like Japan, South Korea, and Hong Kong saw increased sales from Chinese tourists, while domestic Chinese luxury sales declined. In 2018, the United States announced tariffs on approximately $34 billion worth of Chinese imports, according to the Office of the United States Trade Representative. These tariffs targeted a range of products, including machinery, electronics, and vehicles, as reported by Reuters and the BBC. The US government stated the tariffs were intended to address the trade deficit and concerns over intellectual property theft, as documented by the USTR and World Trade Organization. In response, China imposed tariffs on $34 billion of US goods, including agricultural products, automobiles, and seafood, according to China's Ministry of Commerce. The tariffs contributed to price differences between luxury goods in China and those in Europe and Japan, as reported by Bain & Company and the Wall Street Journal. In 2018, the Chinese yuan depreciated by about 5% against the Japanese yen, according to Bloomberg, making luxury goods purchases abroad more appealing for Chinese consumers. According to Bain & Company, Chinese consumers accounted for about one-third of global luxury spending in 2019. Data from the China Tourism Academy shows that, before the pandemic, over 150 million Chinese traveled abroad annually, with shopping as a primary motivation. The World Tourism Organization reported that Chinese tourists were the world's top spenders overseas, with luxury goods as a major category. In 2018, Chinese consumers made 27% of their luxury purchases abroad, according to McKinsey. Europe, Japan, and South Korea were among the most popular destinations for Chinese luxury shoppers, as reported by Global Blue. In 2019, Japan and South Korea saw double-digit growth in tax-free shopping by Chinese tourists, according to government tourism statistics. The Korea Tourism Organization reported that Chinese visitors made up the largest share of foreign luxury shoppers in South Korea. These trends illustrate the significant impact of Chinese consumers on the global luxury market, as documented by multiple industry reports. According to Bain & Company, China's personal luxury goods market contracted by 10% in 2023, marking its first decline in 5 years. However, the impact was not uniform across all brands and sectors. Some companies, such as L'Oréal and Estée Lauder, reported growth in specific product categories despite the overall downturn. L'Oréal's 2023 annual report highlighted double-digit growth in its luxury division in Asia, driven by demand for skincare and beauty products. Estée Lauder's financial statements also showed resilience in the Chinese market, particularly in the ultra-premium skincare segment. Bain & Company's 2023 China Luxury Report noted that brands investing in digital channels and personalized experiences outperformed competitors. These strategies included online consultations, exclusive product launches, and loyalty programs. The beauty sector, especially perfume and cosmetics, remained robust. According to Euromonitor International, China's premium beauty market grew by 5% in 2023 as consumers continued to seek high-quality products. Ultra-premium skincare was among the most resilient segments. Estée Lauder's 2023 report cited strong demand for its La Mer and Estée Lauder brands, supported by increased investment in research and development. L'Oréal and Estée Lauder both reported robust sales growth in China's luxury beauty sector, attributing their success to product innovation and strong consumer engagement, as detailed in their respective 2023 annual reports. Richemont, the Swiss luxury conglomerate, reported a 10% increase in global revenue for the fourth quarter of 2023, according to its financial disclosures. Richemont's Cartier brand contributed significantly to this growth, with strong performance in jewelry and watches, as stated in Richemont's 2023 annual report. Despite a decline in China's sales for some brands, companies like L'Oréal, Estée Lauder, and Richemont demonstrated that strategic investments and product innovation can drive growth, even in a challenging market environment. All data cited is from Bain & Company, Euromonitor International, and official company financial reports for 2023. According to the Hurun Global Rich List, China had over 1,000 billionaires in 2023, the second highest number in the world after the United States. Despite economic fluctuations, sectors such as technology, e-commerce, and luxury goods saw significant growth. For example, Alibaba and Tencent founders remained among the wealthiest individuals in China, according to Forbes. In 2022, Bain & Company reported that China's personal luxury goods market grew by 36% year-on-year, driven by domestic consumption and digital platforms. The expansion of China's middle class and the rapid adoption of online luxury shopping platforms contributed to the increase in wealth among entrepreneurs in these industries, as documented by McKinsey and Bain & Company. According to Bain & Company, Chinese consumers accounted for about one-third of global luxury spending in 2019, with a significant portion of these purchases made overseas. In 2023, the China Luxury Report by Bain & Company noted that Chinese luxury spending began to recover, but much of it remained focused on international markets due to price differences and product availability. The Chinese government has implemented policies, such as reducing import tariffs on luxury goods since 2018, aiming to encourage domestic consumption. According to the Ministry of Commerce, these measures have contributed to a narrowing price gap between domestic and overseas luxury goods. The National Bureau of Statistics reported that retail sales of consumer goods in China, including luxury items, grew by 12.5% year-on-year in 2021. Industry analysts from McKinsey & Company project that China will become the world's largest luxury market by 2025, driven by policy support and rising consumer demand. According to Bain & Company, China accounted for 21% of the global luxury market in 2021, with projections suggesting it could become the world's largest luxury market by 2025. In 2022, luxury sales in China reached approximately 471 billion yuan, or about $70 billion, as reported by Statista. The market's growth has been driven by younger consumers, with McKinsey noting that millennials and Gen Z accounted for over 50% of luxury purchases in China. Brands have responded by increasing investment in personalized services and exclusive experiences, according to Deloitte's Global Powers of Luxury Goods report. The integration of traditional Chinese elements with modern luxury design has also become a key trend, as highlighted by the China Luxury Report from Bain & Company. According to Bain & Company, China's luxury market grew by 36% in 2021, reaching nearly 471 billion yuan, or about $73.6 billion. This growth was driven in part by changes in global trade, including tariff adjustments and the impact of the US-China trade war, which led to a shift in luxury consumption from overseas to domestic markets. Data from McKinsey shows that Chinese consumers accounted for about 21% of global luxury spending in 2021. Younger generations, particularly millennials and Gen Z, are driving this trend, with over 70% of luxury purchases in China made by consumers under 40, according to Deloitte. The rapid adoption of digital platforms has been a key factor. According to Statista, online sales accounted for 23% of China's personal luxury goods market in 2021, up from 13% in 2019. Market research from Bain & Company highlights that brands using data analytics and digital engagement have outperformed competitors, adapting quickly to changing consumer preferences. The China National Bureau of Statistics reported that retail sales of consumer goods, including luxury items, rebounded strongly after the initial impact of the COVID-19 pandemic, indicating the market's resilience. According to the Hurun report, China had 1,133 billionaires in 2022, the highest number in the world, reflecting the country's growing entrepreneurial class and its impact on luxury consumption. The International Monetary Fund notes that global economic shifts, such as trade tensions and currency fluctuations, have influenced local markets, including China's luxury sector. Despite challenges, a 2022 report by Bain & Company found that brands with flexible business models and strong digital strategies were able to maintain growth in China's luxury market. The World Economic Forum has highlighted that unexpected global events, such as the pandemic, have accelerated innovation and digital transformation in retail, including luxury goods. Industry reports from McKinsey and Bain suggest that monitoring consumer trends and adapting strategies based on data are essential for success in the evolving luxury market. For more detailed analysis, consult reports from Bain & Company, McKinsey, Deloitte, and the China National Bureau of Statistics on the ongoing changes in China's luxury market and the global economy.